And there's many ways you can automate this anyway to make it more streamlined and easier. So yeah,
Yeah.
definitely. I know some people would like to know what's your trading style these days, like what instrument you look at, what tools you use in your trading, and how do you apply them a little bit in your trading.
Yeah, I mean, mine's relatively simple. So for me, it's a top-down approach. So I'm either trading on a daily or a daily or a 4-hour chart. So my trades are executed on a daily or a four, and then I would say my favorite chart is the weekly because it just gives me a little bit more perspective, but it's still relevant enough to what I'm doing. And all I will do is I will go through 3 times a week. I'll go through my 40 markets and I'll establish my levels. So usually that's a Tuesday and a Thursday, and then on a weekend I'll clear the charts off. I'll go back, refresh my levels. Obviously, if there's a 5-year high, I won't probably take that off and re-put it. But anything that's relevant now, I'll do a kind of chart refresh, and then for me, I'm trading 2 against the trend moves that require price to reach a predetermined level. And then it's a case of looking at, I use a 5 high and a 5 low band. So I use an exponential moving average 5 high and a 5 low. And essentially, it's a little bit like, the easiest way to describe it, it's like a tighter Bollinger Band. And then I've got a specific setup that has to happen on those bands. So I look for price to essentially, if I'm shorting off a resistance, price has to show me that it wants to close below the band, and then I'll stage my entry. So I'll come in at the higher band, and then if it breaks the low, I'll get in again. So essentially what I do is I split my trades into about 2 or 3 different entries, and my max risk is 1%. So I won't risk more than 1% per trade. And that's my primary trading tool. So it's basically a reversal play. But then I have a couple of other trades that I will put in there. But I'm basically using moving averages, levels. I bring in a little bit of divergence as well. So if I see divergence on the weekly, then I will probably hold the trade for a little bit longer because I've got data that shows me that if I've got a weekly divergence and the trade plays out, then I can hold it for a slightly better risk to reward. But my average risk to reward is 3-1. So I tend to go for a slightly higher risk to reward and a lower win loss. I get my students to work to about a 50-50 win loss if they can, but I'm quite happy being a little bit below that because I think as you've been trading a longer period of time, you can cope better with a lower win loss.